Hi everyone, a very good afternoon to one and all. Welcome to our virtual conference on digital money. Payment Councils of India and Lyra presents Digital Money 2020, powered by PhonePe. Let me start the panel discussion on overcoming the challenges of outbound cross-border remittances. I'll start by introducing our moderator for the session, Ms. Sohini Rajola, APAC and ME Network Head, Western Union. Welcome, ma'am. Now we'll start by welcoming our panelists for the session. Mr. Venkatesh Saha, Head of APAC and Middle East Expansion, Transferwise. Welcome, sir. Mr. Naved Ashraf, Head India and South Asia, Moneygram International. Welcome, sir. Mr. Mahesh Muraleedharan, Country Manager, Rapyd. Welcome, sir. I welcome all of you to the session. I will request you to kindly give our audiences a brief introduction about yourselves, and then I will request the moderator to take this conversation forward. Thank you.
Thank you very much, Neha. How do we, do you want me to go ahead with the introduction and then we go around the table?
Sure, that sounds good.
All right. So thank you everyone for joining in this panel discussion. I'm Sohini. I'm going to be the host and moderator for today's discussion, where we'll hopefully get some interesting and maybe divergent, but at least engaging and challenging views on addressing something which is really topical and important when we look at India as a country in the context of cross-border remittances. I myself work Western Union. I head the network for APAC and Middle East. And of course, India is a very, very important country, both for inbound and outbound remittances. I'll pass on to Venkatesh, if you'd like to introduce yourself.
Hi, everyone. My name is Venkatesh. I work for a company called Transferwise. We're a technology company whose mission really is to make moving money around the world more convenient, more transparent, cheaper for everyone, and something that we also say often, we hope that it'll eventually be free. As a company today, we have 9 million users globally. We move 6 billion each month around the world. In terms of our offerings, we do a few different things. We offer a digital-only remittance services, which means we don't have any branches. We have a multi-currency wallet that's live in a number of markets internationally. And more recently, we've launched a multi-currency debit card product. We offer our services in 40 plus countries globally. We see demand for our services in India and are looking to explore the market.
Thank you, Venkatesh. Naved, if you could introduce yourself, please.
Thank you, Soni. Hi, everyone. My name is Naved. I work for a company called Moneygram. I have 20 plus years of experience in the money transfer, telecom, and payment space, having worked with companies like Western Union for 10 plus years and MoneyGram now for 1 year. So you could consider me sort of a veteran. I've also had a brief stint with First Data, and I was the head for alternate channels for India. Prior to that, I was with telecom, various companies for 8 years plus. I'm based out of Gurgaon, and I handle the South Asia region and countries like Bangladesh, Sri Lanka, Nepal, Bhutan, and Maldives.
Great. Thank you, Naved. Mahesh?
Yeah, can you guys hear me well?
We can.
Yeah, I'm just logged on 2 devices just to hedge bad internet connections. There's a bit of work going on in my apartment anyway. Hello, good morning, everyone. My name is Mahesh Muraleedharan. I lead the Indian market for a company called Rapyd. Rapyd basically is a technology company which wants to make cross-border payments very seamless for merchants and network partners across the world. The way we do it is we work with local payment experts across the globe. We currently support over 2,000 plus currencies and 2,000 plus payment methods across 130 holding currencies. And we offer a single integration for any digital merchant who wants to be able to offer local payment methods of transaction for their digital goods and services across the world. So I've been with Rapyd for about a little over a year and a quarter. And we are looking to keep expanding across the globe, offering a full stack local payment solution so that merchants across the world have access to local payment methods of their customers. And I've been sort of working with the Indian startup ecosystem for about a decade now. I started off with consulting, but I went on to early stage e-commerce, early stage ride sharing. I helped launch Uber in the Indian market. I was there for a significant amount of time. And then I worked with a company called Oyo Rooms, set up a market for them in Singapore. I also had a brief stint as a venture capitalist, but at heart, I'm a builder. I like to build businesses from scratch in emerging markets. So excited to be here and talk with all the veterans of the payment ecosystem today.
Thank you so much. So we do have quite a stellar lineup and it very diverse. Like we have, obviously Moneygram, which is more like a traditional player in remittances. We have Transferwise, which is trying to be, is a tech-first disruptive player, and then we have Rapyd. Can give us more of an overview of how to connect the global and the local, and what's changing in the entire basic tech stack or technological ecosystem there. So thank you very much for joining. And before we get started and we move around to some of the key questions that we can address through this session, just for a brief background, when we think of cross-border payments or cross-border transaction flows, that's a multi-trillion-dollar industry. And I think for the purpose of our discussion, if we concern ourselves more specifically with what is the accepted definition of remittances or cross-border remittances, that is still more than a $700 billion industry. Now, those numbers, what will the impact of COVID be on those numbers? Will that go down by 20% or increase by 10%? There are different experts with different points of view, but it is a huge amount of flows that moves across borders. And very interestingly, I know it's easy for us to get caught up in the millions and billions of transactions and amounts and revenues, but really at the core of it is the customer, right? Who are these people who are sending money? It can, of course, be merchants, it can be demand for goods, but at the very core are migrants, people who leave their home country to go somewhere else, work, study, invest, build, whatever that they do to make this world a better place. And the estimate is that there is nearly more than 270 million migrants across the world. If it was a country of migrants, people who choose to get away from their own homeland, it would be in the top 5 countries by population in the world. So those are the people that all of us and our industries are trying to serve, amongst many other use cases. But just wanted to give that as a backdrop to, for our listeners and our participants. And, within the context of this global cross-border remittances, India has always played a very, very key role. India has historically been one of the largest recipients of cross-border remittances. So from an inbound point of view, the World Bank publishes this report year after year. And in most of the years, you would find that India is the highest remittance receiving country. That is not that, and that kind of overshadows actually the growth in outbound remittances from India, which is not insignificant either. Outbound remittances from the country on the back of multiple things, including growing prosperity, growing integration with the world, the very popular introduced by the Reserve Bank. There has been a huge growth in outbound from India as well. And there's been a lot of evolution in how these transfers of these remittances have been conducted over some time, based on technology, regulatory, ecosystem, but still challenges abound. And I think that's the reason we are all collected here, to be able to get the views of this esteemed panel on how to overcome some of these challenges. So with that background, I'd like to start, I'd like to ask a few questions to each of the panelists and get their specific opinion. And I'll start with you, Venkatesh, on when you looked at cross-border remittances from India, what do you think are the key challenges? And are there any innovations that strike you, which either your company has pioneered or which you can maybe take a leaf from other countries where Transferwise operates, to say, here is a solution that could be replicated in India to be able to overcome this challenge?
Thanks, Sohini. I think first let me start by saying that India has actually one of the most sophisticated domestic payment infrastructures in the world. innovations like UPI, real-time payments, etc. And so the question I think you're asking is, what will it take to make the same case in cross-border payments as well? Because there certainly is demand for sending remittances cheaply, securely, and as much as possible digitally across borders. So I think for us, the first, being my co-panelists here, is really around the regulatory framework for non-banks to participate in remittances. So what we've seen in markets like the UK, like Singapore, is the concept of creating something which is like an e-money license, where you unbundle certain activities that are traditionally reserved for banks and allow non-bank companies like us to be competitive in this market. So the e-money construct allows us to not just do remittances, but also offer a wallet, a card product, and related payment instruments. So while there has been a huge progression in licensing in India, I think what we're really hoping for someday is to be able to see something similar to this, what we have in the UK, in India as well. And I think that would really seed a number of players in what could potentially be one of the largest markets in the world. Maybe Naved, you'd like to jump in here as well?
Yeah, sure. Thank you, Venkatesh. So if I talk about India, and Sohini touched upon that earlier, India is the world's largest remittance receiving country, right? $83 billion into India, as per the RBI. But if we talk about outbound, although the numbers are still not, I would say, as transparently published as the inbound, but it's also close to around 18 to 19 billion is what the estimate says, right? It's not a small market to be, and we can't take it lightly. You're right that if we look at it, the LRS has definitely opened the doors, and from a regulatory perspective, and they have allowed purposes like travel, education, maintenance of close relatives or gifts, or etc. But if we look at the overall regulation, it's largely tied to banks, right? And that's where I think the regulation opening up is something that we should be pushing for if we want the industry to basically go in the direction that India wants. We need an AD1 bank, right? And it can only be done through an AD1 bank. Even the KYC needs to be done by an AD1 bank. And this is something which is like a little limiting. Although we have a lot of franchises in India, both Moneygram and Western Union, quite a few of them are already doing outbound, and it's not something which is new, right? These players are non-banks, but at the end of the day, they are riding on a bank, right? And that is where I think the innovations or the cost that we can bring down, etc., that is something which is not going to be possible till we are basically actually having a direct play in the market. And a technology player like Transferwise, obviously, which is doing it across the globe. Moneygram is evaluating that. We haven't taken a decision on that yet, but still going through an AD bank is what is imperative. You can't do it on your own. And that is where I think we should be looking at inbound, where the regulator has a lot of checks and balances in place to basically streamline this. I know there are a lot of doubts around money flowing out of India and how you would want to regulate that. Obviously, the regulator doesn't have a problem in the money coming into India, because that's obviously helping the country. But money flowing out of India, they really need to keep a close watch that it's only going where they want it to go and through the channels where they want it to go through. I think that's the only thing we need to really look at, and whether we can do something on that. Tech can definitely play a role coupled with the regulatory framework.
Yeah. No, thank you very much for that, Naved. And thank you, Venkatesh, for actually getting straight to the point on what is the biggest challenge. I think regulatory hurdles and this difference in experience that is there between when you want to send money to India, it is on the back of the domestic payment systems, which are really like world-class in India. It's virtually what we call at Western Union, but I'm sure everybody is able to provide that. Is money in minutes. You can send money to somebody in a bank account, in our case, even to be picked up from a cash location. And virtually, if you're sending it, if I'm sending it, for example, to you, Naved, from Singapore at this point of time, I give you the, the details, and you can be standing outside a location or looking at your phone, logging into your bank app, and money reaches. So inbound to India is super. It's built on multiple things, including regulation and the technology and the domestic payments network. But if we were to reverse that flow, like Venkatesh mentioned, there's a long way for us to go, and regulatory hurdle is amongst the biggest ones there. But let's hear from Mahesh on the how he looks at the overall payments system here, and is there like a technology answer to this big challenge? Firstly, what he believes is the biggest challenge right now, and what do you think can be done beyond, of course, regulations need to change, but any aside from that, Mahesh, that you would like to add?
Thanks, Sohini. Thanks, Naved and Venkatesh. They've encapsulated most of the relevant stakeholders and the problems in remittances. The one thing to understand very clearly is any innovation in not just remittances, but cross-border payments or payments in general, nothing is going to affect the core service, which is basically sending or receiving money. What you can work on is the means of delivery, make it as digital as possible, reduce paperwork, reduce physical contact, the speed as real time as possible, and also the convenience of it. What is the UI looking like? What do you need to do to make sure that you're KYCing or you are being KYC'd? And basically, this is what leads to the offshoot of how do you actually look at the revenue and cost angle here. Revenue is a very tricky subject. It's very competition led, and that can change within a matter of minutes without very apparent logic. But when you come and look at the cost part of it, right, there's a large degree of improvement scope in being more transparent, in actually being regulated to the extent of not having extremely unrealistic charges or charges that don't make sense. For example, a flat fee irrespective of the quantum of money that you send in general makes it very difficult for smaller businesses or retail customers, right? To drive costs down, as both Venkatesh and Naved said, India has made tremendous leaps on the domestic payment infrastructure, to the extent of the entire world sitting up and taking note of what India has done. Every other country in the world is now having their own version of what UPI has managed to do here in India today. So we're very, very well placed in actually moving towards the digital delivery part of it. Of course, the last 8 to 10 months of the COVID situation has accelerated that further. But two places where we really need to optimize is how do you optimize the Forex and make it more transparent? And how do you actually involve more progressive technology partners? How do you sort of start getting into the share of what 81 banks are doing right now? How do you get more technology companies like a Transferwise, like what Rapyd does? How do we start participating more in this process and thereby start bringing down costs which are involved in the entire process, make the entire digital delivery more transparent? That's what I would, add on to what they've already succinctly encapsulated.
Thank you very much, Mahesh. And that's a very good segue into where I wanted to go next with this discussion, which is on, yes, there is, it does appear like regulation is one of the big challenges particularly for outbound, despite the fact that we already have the core framework or the basic building blocks of the domestic payment system is really world class. So if we look at the cost, and there are two kinds of cost, Mahesh, like you mentioned. There is the cost of producing those services. Like, is it even possible to offer cross-border remittances at lower costs from India, and therefore reducing the cost for consumers? And what do you think can be done? What do you think we can do to solve this challenge? What is the technology or innovation answer? Not a regulation, not the fact. For a moment, assume we have this very interesting circular that comes out tomorrow from RBI, which says, hey, now you can do exactly what an 81 bank can do. That puts you at par. So the regulation hurdle, assume, has been resolved. What can be done to reduce the cost of producing this service and in turn pass it on to consumers at a much lower cost? And maybe, Mahesh, we start with you and then go to Venkatesh for this one.
So first off, would all love to read that circular whenever that comes, and it'll inspire a whole new wave of innovation and entrepreneurship. The one thing that is very clear when you look at the Indian market is we are a market of scale and numbers. To the extent that any market sizing problem for India in any industry, you'll be able to make it look like it's going to be very worthwhile to get into India. So we don't have the problem of, say, for example, a city like San Francisco or even Singapore, for example, very, very tech savvy, very deeply penetrated, but they're limited by the size, right? In India, we really didn't think that apart from 250 million smartphone users, there's any more scope for technology companies or e-commerce companies to penetrate. But today we are sitting on the cusp of 550 million smartphone users. Flipkart and Amazon, all through the year, through their sales and through their initiatives, through the backbone of logistics partners, they've gone to tier 3, tier 4 villages, so on and so forth, to unlock demand, right? So there are two things that will need to happen on the back of that circular is competition is going to be very immense in terms of multiple people coming in to take part in this market. Second, with proper technological innovation and education, you will be able to get a large section of the population who don't have the means today to participate in cross-border remittances through a technology wave. They're still participating in offline methods. There are multiple offline, extremely well-oiled machinery. Apart from what people like Western Union do, I've known of offline folks helping in money transfer with a non-technology angle, and this has been happening for decades, right? From Gulf, from Southeast Asia, so on and so forth. There is an opportunity to sort of get them into this marketplace, which essentially means you're going to start seeing whatever the 19-20 billion of outbound versus the 83 billion of inbound, that is going to start increasing by a multiple of whatever, 2x, 3x, 4x. And the best part is as that pie increases, as there is more volume and more competition, automatically efficiency gets into any marketplace and you see costs come down. Because that's the only way you can get costs to come down once you actually increase the number of people playing, both from a consumer as well as a production point of view. Once you see that marketplace start becoming more and more open and more participants come in on both sides of the marketplace, there is no other way but the costs to come down, because you will be seeing scale benefits which you will eventually have to start passing on to the consumer, because not because of the inherent goodness of any company, but because there's competition which is going to start bringing costs down, right? So that is how I would look at it. India is a
very interesting point of view,
not very,
Mahesh. Yeah. So what I'm hearing you say is, hey, if this regulation does kick in, then it will lead to a lot more competition, which will drive scale, which in turn, so the market forces are going to come into play, and that can overall only have moved the market in one direction, which will be down and which will get passed on to the consumers. All right, let's hear from Venkatesh. What else, Venkatesh, do you think beyond competition? Yes, competition always does lower the prices and the costs of producing the service with scale. What else do you think? Is there any other innovation, whether technology-led or process-led, do you think could reduce the costs?
So globally, as a company, we think that we're saving our customers around the world close to $1 billion each year through our service, and we see no reason why we can't bring that to India. So the dream for us in India would be a few things: that we can onboard the customer instantly through a direct or an indirect access through Aadhaar. That's how we onboard our customers in many other countries in the world today. And the second dream for us in India would be if we can actually connect directly into the payment infrastructure. So what does that mean? In the UK, for example, we bank directly with the Bank of England, which is a central bank. We have a settlement account with them. And we're also a direct participant in the faster payment system. That means we actually own the entire customer journey, both the front end, but as well as in the back end. Right? There is, we don't depend on an external partner like a bank, which might have their downtimes and things like that. And we're able to offer that seamless experience, which is what makes a technology-led service like ours potentially superior and also lowers costs over time. So I would say this is the dream for us.
And it's a very, very noble dream. And I think it's actually an ideal state, right? That is the situation where This is the circular that I was just speaking about, which Mahesh also said he would love to read. This is taking that a little further to say you actually get absolute at-par treatment with banks with regard to access to payment, identity, and forex trading systems. And if you get that, then within the definition of the service that you're providing, you are able to do it much better at a lower cost, faster, and hopefully with a better customer experience.
Correct.
That's interesting.
And this has been the building blocks of what we have done in every other country, even in Asia. So I see no reason why we can't be eternal optimists and hope that the circular is here sooner than we all think.
No, absolutely. So it's very interesting that in this question we're still getting process and regulation and market forces being the primary determinants. I'm not yet hearing anything which is like said cryptocurrency will solve this, or any new tech innovation is going to be able to resolve this. So it's really we don't really need to wait for some new invention to resolve this. But let's hear from Naved if he has any other point of view on the cost angle for providing remittances. Naved?
Yeah, sure, Sohini. So I have a slightly contrarian view on the cost. If we look at how we are using the outbound right now, and the bulk of the outbound is for education, right? People are sending their kids outside India to study, and most of them are from affluent backgrounds, right? Most of the people are either in the US or in the UK or in Australia, Europe, etc. And if you look at the current cost right now, I think per transaction, I may be wrong because I'm not into this, but I think it's close to 200 to 300 rupees, right? Then there is an FX on top of it, right? There's a cost of KYC, which right now the bank is doing, right? So I don't think so the customer who's sending his kid abroad or for education, or somebody who is sending his relative abroad for treatment would mind paying 200-300 rupees for a transfer, right? I don't think so. For him, what would really matter is the how he can get the money across as fast as possible, as transparently as possible, and the kind of modes that he can adopt for sending that money, either cash or to a bank account or to a card or to a wallet, right? So that's going to be the survival of the fastest, as I would want to call it. It has to be transparent, not opaque. The sender should be able to see how much he's paying, what is the kind of FX he's getting, and he should be able to do it from the convenience of his home or his office, whatever, without going into a bank, walking into any location, or somebody coming to him and doing all the paperwork. And that is, I think, where the success of this will lie. Obviously, there'll be compliance, AML, etc. around this, how we can get it all together. Customer acquisition will be a huge challenge. I know that the stickiness for digital channels is always more for a customer. If he downloads a Moneygram app or a Western Union app or a Transferwise, whatever app, I'm sure that he's not even going to look at a bank, or he's not going to walk out and he's not going to call any agent. He's going to do it himself, sitting at home. And he would want like a IMPS sort of an experience, right? Real time, as soon as he sends, his receiver gets it. Both of them get a confirmation, and he also gets a confirmation of the cost, etc. I think this is what really is going to make a difference. And that is what the regulator should also be looking at. How to provide the best service to the customer when he wants it, and in as many ways as possible from the convenience of his home.
Yeah, that's an interesting point of view. And maybe, Venkatesh, Mahesh, if either of you would like to respond to Naved's perspective here, that it's really not the cost that is an issue at this point of time. It's the customer experience that we should solve for. What do you guys think?
Should I take it first, Venkatesh?
Yeah, go ahead, Mahesh.
Yeah, so it's a very valid point that he makes. I think so. Cost is also in terms of user experience contributes to a certain sense of cost, because time is money, especially in this industry, right? I think there are multiple facets of the entire money flow. There's the KYC part of it. There's the documentation part of it, the delivery part of it, the FX part of it, and all of these in parts as well as a whole lead to customer experience, which essentially dictates which product or service or stakeholder the customer is going to stick to, or the decision of whether he should even participate in the whole cross-border remittance scheme, right? I think fundamentally, I think we were talking the same language. I think there is a very incoherent, non-homogeneous sender-receiver experiences across different geographies, which is what makes it a little bit more opaque from a costing perspective. So there's just, like, for example, like if I'm remitting money to a country which has real-time rails, but when I'm going to be receiving money, I'm not participating on a similar real-time rail scenario, then there's going to be a certain amount of cost differential, which is where the stakeholders also make their margins. So so I always keep saying that payments is a business where you can't make a lot of money, but it's going to be very difficult for you to lose money. So there's definitely avenues where we can start looking at user experience, which will lead to improved costing. But I agree with the fact that, like, focusing on user experience is key. And I think I would just place my argument with the fact that costing becomes as critical as one part of the user experience, even though it sort of just bubbles up to the stakeholder on top.
Interesting. Venkatesh, I've just been reminded by the, I'm a team that we have the last 5 minutes. So your take on this, and then we'll get into the final few words on this topic.
Sure. So I think really quick, we don't see them as mutually exclusive. We think that we can offer a low-cost experience to a customer that also has a unique customer journey. But where I feel the real challenge is, and this isn't limited to India, is actually many customers don't even know the problem. They don't know when they go to their bank, what is the exchange rate that they're going to get? How much are they actually paying for the service? They don't know that they can actually go shopping to different institutions, whether it's a Western Union, whether it's their bank, or maybe a Transferwise or somebody else, right? And what we see is when we actually educate customers that you are not necessarily getting the best possible rate, both the exchange rate and the fee from your current provider, and there could be other options in the market, that's when we see them taking to digital channels more and adopting services from companies like Transferwise. So in places like Europe, it's actually now in regulation. If you are a provider of foreign exchange services, you have to transparently show what is the exchange rate you're offering and what is the fee that you're charging. And we believe that this will actually help customers, but will also help grow the market. And again, being the eternal optimist, I hope this is part of the circular in India going forward.
No, thank you very much for that, Venkatesh. And, there is, I'll request final words from all three of you, and we will maybe start again with you, Venkatesh. But just a segue, you may choose to comment or not comment, and, give your, one final advice on what it would take to overcome, or what's the ideal state of cross-border remittances that we should strive for India. But if you would like to also comment on the recently introduced tax collected at source, do you think that's aligned with how globally remittances work, or is it a step which makes it even more complicated? You may choose to include that or not, but at least where do you see what's the ideal state for you?
As I've mentioned before, I think, and Sohini, you added as well, the building blocks are all here in India. We have a world-class domestic payment system. As Mahesh mentioned, we have a market that is digital first and has become even more digital in the last year. So there is absolutely an opportunity to offer a fully digital offering like ours in India today, which has a great customer journey and a low cost. All that we are looking for is a nod from the regulator to be a little more progressive and try to bring cross-border payments at the same level as they think about domestic payments. I think in terms of the taxation, I think the other thing that we look for from regulators really is consistency in regulation. So when we see things like this 5% or whatever it is that's being taxed beyond a certain point, I think we're still struggling to understand what purpose it's trying to solve, given that all of the providers on this panel today do the full KYC, collect all the documents as needed, know what the source of funds is. What this does is it actually complicates the service even more, because we have to build a different customer journey for people who send beyond a certain limit, a different customer journey for less. And so we would hope that the regulator does take some industry feedback and look at other ways in which they can they can keep a watchful eye on the industry.
Venkatesh, Naved, your comments?
Yeah, Sony. So if I have to just link it to what's been happening on the inbound, we had a 2% service tax on withdrawals above 1 crore in India, which was really hurting the industry. That was rolled back. I think the regulator has been supportive. They have reversed that. Also, post-COVID, if you look at it, when the shops were shut and there was a lockdown, they have been really supportive in putting these shops under the essential services, and they've been allowed to open. Also, we have been really having, I would say, so frequent conversations with the regulator now on the unpaid transactions, if there are any, and they are basically pushing us to pay those out as soon as possible. But yes, demonetization was one, right? That hurt the industry. Then this was the 2% TDS. Again, COVID beyond anybody's control. But once the regulator realizes that this is something which is really hurting, I'm sure that they are going to take it back. We have seen in India that the Jam Trinity has played a huge role, the Jan Dhan, Aadhaar, and mobile. And like what Venkatesh said, we have the best in the world infra on payments. It's just that the regulator needs to take cue from what's happened in inbound and the domestic payment industry, and what is it that companies like us can add value on the outbound. I think that's something which will really help that circular, as you call it, Tony.
Thank you, Naved. Mahesh, final words from you.
Yeah, I think, again, going last has its disadvantages. They've pretty much covered whatever I wanted to say. I think just pretty much just looking at, the only thing to add is like any new change or anything that adds to friction of actually growing your market is something that will put you back quite a few years. So I would urge the regulator to see how they can unlock this market. As you said, it's a multi-trillion-dollar market, and we are sitting at less than 100 billion today, right? What will it take to 10x this market and take it to $1 trillion over the next 18 to 24 months? Should be the thought process with which they would, come out with rules and circulars. I would urge them to like start thinking about it that way, because whatever they want to do in terms of imposing taxes and cesses and stuff, it's very relevant. It's obviously valid. But at the point of time when you don't even know what this market could be over the next 2 years, you're sort of stunting the growth, nipping it at the bud. So that's how I would like frame that.
Thank you so much, Mahesh. So, I mean, if I can summarize for this panel, firstly, thank you all for your, very, very transparent, open, and really enlightening views here. I guess we have huge opportunity, as with most things in India. India remains a very attractive market for all kinds of global players. And the best part is we have the building blocks. But one other underlying theme that we heard everyone say was we're not just about potential and opportunity and building blocks. The ecosystem already has very strong control frameworks in place. So now it's up to us, and obviously at the right time when the regulator deems fit, on how to grow deeper and let the market really be free and open so that it can reduce costs, with taking advantage of all these controls and the framework which exists to be able to offer much more convenient, cost optimized, and hopefully increasing overall the pie for the entire country, both on inbound and on outbound remittances. Gentlemen, it's been really great talking to all of you. Let me hand it back over to the guests.
Thank you to all the speakers for this enlightening conversation. It was a pleasure to listen to you all. Thank you to all the attendees and our sponsors for supporting the event. Thank you. Stay tuned.